What's going on, everybody? Today we're looking at a nice recovery day, and we also have some recent Cleanspark news, so let's talk about it. Now, Bitcoin's seeing a slight green day today, while the miners are rallying pretty good, many up 10%, up double digits. As for Bitcoin, I'm still watching for this break of 44,000. I do think once we break that, we will inevitably head higher. But while we're watching for the potential break of 44,000, keep an eye on this ascending trend line here. I do think if we break this ascending line here, this ascending support, there is a possibility we head back down to 40,000, if not lower. So keep an eye on this ascending support. And also quickly regarding Bitcoin, we are seeing net inflows. These Bitcoin ETFs saw $700 million in net inflows, which are offsetting the GBTC outflows. And since their debut, these Bitcoin spot ETFs have brought in $7.7 billion in funds, offsetting the $6 billion outflows. This is good for Bitcoin. The selling is slowly drying up while the buying continues. And on top of it all, we have the halving only a little over 2 months away now. But let's look over this Cleanspark news. I do think it's pretty big. And Cleanspark today announced 2 new acquisitions, securing their power and infrastructure to reach their 20 exahash goal. And today, Cleanspark announced they went into definitive agreements to acquire 3 turnkey Bitcoin mining facilities in Mississippi for a cash payment of $19.8 million. This purchase is expected to close in 21 days, with the operating hash rate of the combined facilities expected to reach 2.4 exahash per second shortly after closing. Also, Cleanspark went into agreements to acquire a 3rd mining facility, which is under construction in Dalton, Georgia, and this is for an initial cash payment of $3.4 million. The company expects it's going to take another $3.5 million to complete the project, meaning adding the machines, getting everything in place to get hashing, and they have a target operational date for that facility in April 2024, right around the halving. And this facility is expected to bring them a 0.8 exahash. And currently they have 0.8 exahash of machines at their Dalton campus, and it is comprised of 2 facilities. Also, the company was already expanding their existing Dalton campus with an extra 0.8 exahash, and with this recent add, we're looking at a 2.4 exahash from all facilities in Dalton, once they're running at full capacity. But these 2 announced deals, combined with the imminent energization of the Sandersville facilities, provides Cleanspark the additional power it needs to get over 20 exahash per second during the first half of 2024, which is double the company's current hash rate of a little over 10 exahash per second. And they do expect to pay for these acquisitions with cash on hand. Now, I'm sure you guys don't need to hear this from me, but if it wasn't for their $500 million ATM, share dilution, Cleanspark wouldn't be growing their hash rate so aggressively. So like I've said before, anytime there's dilution with this company, of course for shareholders, it's a short-term negative. But in the grand scope, when you look at Cleanspark as a long-term company, you want to see their success, you want to see them remain as a top miner, they're not going to get there without a little bit of dilution along the way. And if it wasn't for that, this company could potentially fade into obscurity. And if you remember, they announced the dilution right around a month, maybe month and a half ago, kind of when the chart was starting to top out, and it kind of caused things to cascade even further. And while of course no one necessarily wants to see dilution, but you have to realize, from an unprofitable company perspective, they're obviously either going to dilute shares or they're going to acquire debt at a high interest rate. This has definitely been a rough environment for small caps that are unprofitable. But Cleanspark's done what's necessary to continue to grow, admittedly at the expense, short term, of some shareholders. But I believe them biting the bullet, us shareholders biting the bullet and putting up with this, is part of the reason Cleanspark has the potential for all this success. The potential to become the #1 top miner. So while yes, dilution is bad, obviously, from a shareholder perspective, you also have to step back and realize, how's this unprofitable company going to have such an aggressive hash rate growth? How's this company going to potentially be the top miner? But anyways, going over some words from Zach Bradford, I'm pleased to announce our expansion into nearby Mississippi and for our newest acquisition in Dalton, which will not only strengthen our ties in this vibrant community, but also improve our operating efficiencies as we prepare for the halving. Given our existing footprint in Dalton, we expect to nearly triple our hash rate there with minimal increases to our overhead operating costs. And with the addition of Mississippi to our portfolio, we're gradually increasing our geographic diversity and expect to apply our proven track record of success in this new and exciting operating environment. As one of the few public miners to achieve scale, we expect to continue to be among the most efficient operators, both in terms of the wise stewardship of our energy portfolio and in our ability to maintain best-in-class overhead costs. And here's a little table that kind of shows you their different facilities, where they expect their exahash to go here over time, and how they're going to get to that 20 exahash goal. But let me know what you guys think. Was it wise for them to announce that $500 million share offering so that they could have expansion like we're just seeing now? Or would it have been better for them to acquire high interest rate debt in order to grow like this or not grow at all? and fade from having the potential of being one of the top miners, if not the top miner over time. So you kind of got to weigh out the positives and negatives regarding companies like this that are unprofitable and the potential for share dilution. So in the end, while dilution obviously sucks, it introduces shares into the market, it takes value away from your shares. You also have to realize that this is part of the market. This is why these companies go and become a public company. They can access capital they otherwise would not access. So this is just part of the market. These unprofitable companies are going to dilute from time to time until they gain profitability or fade away and become bankrupt. But I do believe Cleanspark is going to make wise moves, and management will manage this company well, and their access to this capital, partly through shareholders, is part of the reason why they're going to be so successful, is what they're going to need to continue to grow and be a top miner. But let me know what you guys think. Is it better for a company to announce share offerings, dilute shareholders, or is it better for them to acquire high interest rate debt? Or I guess the third option, do neither and just not grow as much. Let me know what you think is the best option. And like I said, of course, dilution sucks for the short term for shareholders, but if you're a long-term investor, if you have conviction in a company like this, if you're looking at the long term, you realize that any dilution is basically a sacrifice short term to get the company where they need to be on the long term. But let me know what you guys think. Obviously we don't want dilution, but this is part of the necessary evil when dealing with some of these small caps that are unprofitable. The goal is choosing the companies that'll make smart moves, do the right thing with that access to capital. But I'll leave that article down below for you so you can look over it yourself. But looking at Cleanspark, I'm keeping an eye on this ascending support. If we break this, we could head back towards the high sixes, potentially fill this gap. That's one thing I'm watching for. But I think all this will depend on upcoming earnings, so keep an eye on it. Now, I also wanted to quickly mention Sphere 3D. It looks like we're seeing a breakout of this descending trend, so keep an eye on this. And also going over the daily, you'll look and see that we had recently a golden cross. This could be what Sphere 3D needed to continue to move higher. We did fill our gap back in the end of last year, just recently here, and it does look like we're seeing a breakout of this kind of a descending wedge pattern. Sphere 3D is up right around 10-11%, so I would rather look for a little bit of a red day personally, but I do think it's a solid add, a solid DCA right around here. I have been building out my shares, so in the future I can sell some covered calls when this does start going crazy. But let me know what you guys think about this Cleanspark news, and do you think they'll reach their 50 exahash goal? Also, what other miners are you looking at right now? Do you see any good chart setups? Let me know down below. Thanks as always, guys, and I'll see you next time.